We're going to talk about venture capital today, and these gentlemen, particularly these guys over here from Velo, specialize in iGaming for venture capital. And Martin is a new company that is also going to enable companies that are interested in the social casino space to basically leverage their marketing dollars. So we're going to kind of dig into that and explore that a little bit more. But first, really, Martin, I'd really love for you to get into this and explain to us how you can leverage your capital. We'll do this next, but Evan and Andrew really take care of the front end for us and help us in the initial stages. They've done angel financing, they've done mid-capital raises. So let's start and talk a little bit about some of your past experiences in angel financings and in the social casino space and also in the regular gaming space.
Great, yeah. So we're Velo Partners based in London. I mean, there are some slides here which we can go through in a sec. Those are probably going to be rotating at some point, just in terms of some of the deals that have been done in the sector and that. So we generally look at Series A to development capital. What we've done in the games business, inevitably you get pitched by a lot of people, and we've done some very early stage investing there as well. I suppose the short answer for early stage stuff is that it's bloody difficult. And I don't know, I'm sure there's people here with experience on both sides of it as investors and pitching for money. You know, we like to invest in the gambling sector. We don't like to be gamblers ourselves, we often like to say. And I think it's early stage games, you know, guys arrive at you with a concept, and aside from being able to identify, you know, great graphical assets, which you can often just sort of have a feel for, it's very difficult to sort of have any feel for whether a game's going to be successful. So our experience generally with early stage is that we lose our money. And I suppose what we've tried to think about is, and what we've learned from some of our co-investors who've been successful in early stage investing, is at least if guys arrive with an intellectual framework which says, this is the game, we're doing a hidden object game, for example. This is why we think it will be successful. These are the emotional triggers that we're going for. This is what we saw, for example, in a Supercell game and why we think that particular element was successful. We're going to replicate it in the following ways. We expect the following results. Then we're going to take a player up emotionally to that point, and then we're going to let them settle. And so in other words, they've really mapped out a life cycle, and it's actually the same in a slot game, by the way, but this is obviously much more in-depth in a proper game. So if we can see something like that, then in my mind it starts becoming investable.
I was going to say, just to add to that as well, is not only do you need to have the intellectual ability to convey that you've understood what aspects of the game are going to be your hooks, or at least going to be able to test them, but then something that I really focus on is how is this team going to be able to measure and iterate on those hooks and figure out whether they're actually right. Because part of the key things about being successful when you're starting out and with a game concept is your game concept will probably navigate through 3 or 4 different twists and turns before you actually find which particular parts of the formula work. And that iterative loop cycle is probably the most important thing that I'm looking at in terms of capability of a team in front of me. Yeah.
Martin, you were an app developer as well, right? So I'm guessing you experienced some of those.
Yeah, absolutely. So I spent 2.5 years actually doing a music app company, which is where the pollen concept came from. And in terms of slightly later down the track, if you like, you've got the problem that we had, and we looked for a solution in the market, we couldn't find one, so we built pollen, was the idea of being able to see and this was just coming out of the sort of like the waiting and testing phase. You could see this early traction you're getting. You wanted to reinvest money back into user acquisition, but you weren't able to unlock the money quick enough from Apple. So as a developer, you're sitting there and you can see revenues, but you're waiting on iOS, it's up to 67 days. On Google Play, it's about up to 45.
Let's get all in the detail of that,
sure.
And a little bit further in as we go. But I really want to dig in and understand if I've got a startup, if I've got a great idea, how do I launch it as opposed to just me working with 3 or 4 other developers on our own dime, bootstrapping it, or maybe that is the answer, that bootstrapping is the only solution these days. Or is there any early stage monies out there?
I mean, there's no secret. I mean, bootstrapping is probably the biggest I would say, category of people who come to us with games. I mean, they've had to at least get it up to the first level of initiation. So they've got to get something up and running that you can at least look at, a minimum viable product. And bootstrapping is the typical way that we're seeing that come along. I mean, there are angel networks out there. There are people who have got checkbooks for speculative startup games, but you need to, I think, get the game to a point where you can start demonstrating KPIs that we can then start looking at and relating to.
But there's no incubators for social casino or casino gaming, are there? That you're aware, are you?
You know,
aware?
in the casino category, there's very little. I mean, that said,
And why isn't there?
Well, I suppose, like any other, like the games business and like the e-commerce business and like the ad tech business, there are lots of people who've made money. So, you know, there are a lot of early stage angels who will chuck $50,000 or $75,000, that sort of money into a pot, and there's lots of that. And what we generally find is that's usually found via one's personal networks, and personal networks can be mined in a whole range of ways. And, you know, when people come to us for that sort of money, we have to know them, we have to get to know them. I mean, it's a huge amount of work on their behalf in conveying and building that relationship. Because even, it doesn't matter who it is, you're still going to, you know, we're working with one at the moment, which is really early stage. You know, it takes you months just to get comfortable that the person's not going to run away with your money, that they're going to have some form of governance that you can kind of believe in. And, you know, these are all things that a particular first-time entrepreneur just have no idea about. So, but those little pockets of money are available. And usually what we say to people is, you know, take that money, get yourself just a little bit further, then you start wrapping some governance around it, and then talk to people who are going to, like, you know, because people come to us, and we're going to have board seats, and we're going to have minutes, and we're going to have like all this sorts of stuff, which is a nightmare for most people, but you've got to have it, you know. It doesn't matter how big the investment is. For our fiduciary duty to the money that we manage, you just got to have company structures and things. So generally we say, like, you've got to get as far as you can on, as Andrew said, bootstrapping it. If I was a game dev guy now, I mean, I think I would almost certainly put together an unbelievably brilliant video for, I don't know if I'd be able to do that, but I would certainly try, for like a Kickstarter or a Seedrs. I would go into one of the crowdsourcing platforms and probably develop from there.
Yeah.
I think, just from a UK point of view, so, and I know this is the same in Canada, certain countries have got very attractive tax regimes as well for that initial sort of round of capital. I know they do the same in Finland.
That's exactly right. No, the UK has got, I mean, because that's where we're based, and we see a lot of deal flow there. The UK is an incredible, you can, under the SEIS scheme, you can write off 75% of your investment in the first year, so against your capital gains tax. So I think it's one of the best in the world. And it really kind of means if you put $100,000 into something as a private individual, you can get a $75,000, £75,000, whatever it is, write-off in your first year. So really only, provided you've obviously got the income, but then you only, your cost of investment actually is $25,000, you know, your effective cost. That's very
still
attractive.
have to have the 25,000.
Yeah,
but
That's true.
And you've got to have the capital gain to write it off against.
Right.
You know?
One of the points I also wanted to, that Evan touched on that I think is important just in thinking around getting funding throughout the stages of getting a game not only bootstrapped and up to a minimum viable product, but then beyond that, the process of courting the capital providers and building a relationship is an important one. And I wouldn't underestimate getting that started as soon as possible.
So who are they? We know you guys are one of them. Who else is providing capital for gaming?
In the early stages.
Yes.
Look,
Name the names. You guys know them.
No, look, there's a lot of money that was made in the Scandi market. So there are a lot, particularly in Stockholm, founders of businesses like Cherry and Betson and NetEnt. There's been a lot of principals or backers in some of those businesses that made money.
So like the CEOs of those who've got a lot of personal money,
or the shareholders who arrived prior to them. So we've come across a lot of either social casino businesses or real money wagering businesses that picked up money in those markets. And there are now one or two VCs, and I'll be happy to circulate them to you, and whoever wants them can get them. So there's one or two VCs that have now come up in those markets that focus on the sector.
Burleywood, are they one of them?
Burleywood is they don't do early stage. Burleywood was founded by a guy named Mark Blanford, who was really one of the pioneers, probably the pioneer of sports betting on the internet. His business was Sporting Bet. He was an early stage investor in lots of little sports.
He's a real money guy, though.
Yeah.
He's a real money guy.
wagering, yeah.
I mean, I don't think he's. I can't think of a single Burleywood investment that sits inside the social space.
Yeah,
No, I don't think so.
And I think so. That was that sort of Scandinavian node. There's a bit of a South African node, which kind of we connected to because there were quite a lot of early stage South African businesses that managed to migrate into the real money wagering online business. And then there's a lot in Israel. And so there's tons of early stage money in Israel in our experience. We've invested in a number of startups that were seeded by maybe someone who came out of the 888s, founding shareholder base or early stage investors there. There's obviously the whole world of Playtech. I mean, there's probably
But no funds though in Israel.
So just as you mentioned Israel, I mean, there was recently another. I think there's a fund called the Singularity Fund, and we know that Singularity are an Israeli-based fund. Is it Singularite or Singularity?
They made one investment. Is that why it was Singularity?
They've raised a $100 million fund.
And is that for?
I think it's relatively early stage.
Real money gaming or
No,
for
it's for
mixed?
social.
Wow, that's phenomenal. That's great.
But so in terms of, one's got to reach out to as many people as you possibly can, and you've got to be kind of, often I say with startups, we do less buying, they do more selling. In other words, the guys who are very persistent, it's just the reality. It doesn't. So the qualitative filter very often is the person who's able to shout loudest in my inbox, and get attention and get noticed. And we get a lot of stuff that just comes into info@velopartners.com and off it goes. And if they don't follow up with a phone call or something, or another email or a text or a tweet, it probably just gets buried. And so the guys who are able to just make a bit of noise, get noticed, probably have a meeting. And then at least they have an opportunity to get to know us. We can then introduce them to 2 or 3 other angels, and people start triangulating a little bit. But the courtship process, even for small amounts of money, is exhausting, and it takes a long time. So the sooner they get it moving, the better. Because there's no question, we were just at the ICE show now, many of you are probably there too, it's the big gambling show. And so we will always catch up with people who we saw 6 months ago at the previous ERG conference or something. And then once you've seen someone 2 or 3 times, there's a sort of personal rapport, and then you're more inclined. We can go to our partners, and all VCs are the same. They can say, we've been tracking these guys for a year. People like to be able to say that. And we've been tracking them for a year, and then we kind of getting to know them, and maybe we should put a bit of money their way. That process takes...
You're not going to walk in cold off the street. And it often takes...
No way.
A couple of years, like you're saying, to develop. I mean, we've known each other for a couple of years now, and I'm still trying to get money from you. So, yeah, I know. So let's talk a little bit about friends and family money. What can you advise in terms of, if I'm going to go out, I'm going to raise friends and family money so that I still have friends and family after I do the deal, and it probably crashes. What can you advise me in terms of how to get a good deal from friends and family, and how to avoid just a disaster?
Yeah, I mean, how to have the friends and family afterwards. If that family are always going to be family, so I mean, there's nothing they can do about it. But no, look, we see it all the time. I mean, it's fear and greed. One has to give them. Greed is why they're there. Fear is what stops them from investing. So my experience is the most open conversation is, listen, I'm going to take some money from you, but absolutely you might be burning this money.
Being honest about the risk
and generally,
profile of it
you
is
tell
important.
that to people. They're like, okay, I know where I stand. Of course, no one wants to burn the money. People, it's an age-old thing. People like to lose money far more than they like to make. So in other words, the loss is they like to avoid losing money more than they like to make money. The pain is much worse on the downside than the joy you get on the upside. I mean, that is behavioral economics, which is absolutely true. So no one
That's
wants
why
to,
casinos exist, right?
Yeah. So no one wants to burn their money, but being absolutely open, look, this is what, this, you can lose your money, but this is why I think I'm going to be a responsible steward of this money. That's a fair conversation. People don't mind taking risks. A lot of people like risk.
Spread it around if you can. I mean, try and get lots of little bits from as many different friends and families as you can, rather than plug it all down and then over communicate.
And
Do you still have any family members that you talk to?
Yeah, because the thing there is about transparency, right? You just communicate, and you keep communicating, and if it's bad news, you get it out. Otherwise, you're going to lose your friends and possibly.
I think some of the best things you can do, I mean, when you're going through tough times and you've taken friends and family money, is just putting together the really detailed emails as to what's happened, why it's different from what you think was going to happen. Explaining it, try and put points down as to how you're going to iterate. That's
exactly. We invested one of the last early stage businesses we invested in was in Canada. It was actually a lending business, a lending platform, and he went through. There was a huge shakeout in the US lending space, like there was in the UK in the micro lending space, and he came within 7 days of the business shutting its doors after 4 or 5 million of money that's gone in over several tranches. And he's a solid guy, and he sent out detailed emails saying, this is the issue. This is how we expected this issue might arise. This is how we're responding. And he sent that out probably every Friday. And some of it was really long, and a lot of people probably didn't read it. But they felt that the guy was putting his shoulder to the grindstone. He wasn't just like,
Didn't have his head in the sand.
yeah. And he wasn't falling over with the stress. He was like putting his hard hat on and going into battle. And afterwards, we felt, fortunately, actually, that had a decent outcome. But we felt that if he had lost all the money, at least this guy absolutely went down trying, and trying in the right areas. He opened the network up. He said, guys, I need contacts in banks. This is the kind of contact I need. Has anyone got one? And he had about 12 investors. Everyone came back with something. Most of it was nonsense, but at least it was. And he really used the power of the crowd. And we just felt if it went down in flames, at least the guy went down trying. You know?
What about terms? I mean, so let's say you want to raise 100,000. What would you say the
Well, look,
terms you offer your friends and family
You know, it depends how
investors?
sophisticated they are. We see two groups of people. The one, people say, we're all the same, we're all equity investors, everyone's got the same class of shares, and, you know, we're all sort of in the same boat. We hate that, you know. I mean, we want to be, so could we be a bit more sophisticated? So depending on who your friends and family are, if they work for Morgan Stanley or something, they're going to know this stuff, you know. They're going to want to see a preference share. It's very rare not to see a preference share, where there's at least a 1 times preference, or otherwise, I mean, the most aggressive we've seen, and we've done it ourselves, you go in on a loan. So the 100,000 is loan capital. Once our loan is repaid, only then do we own 25% of your business. So it's quite aggressive. You know, you've got to pay back the loan. It's secured against, I mean, the IP usually, the entrepreneurs never believe this, but the IP, in my experience, is worthless. It's always worthless. You can never recover anything out of the intellectual property of a business. Doesn't matter how much money's gone into it, you know, unless it's got some patent that Google wants or something. So, but usually it's a pref share where first return always comes to us. And generally, I mean, so that's the first thing. The second thing, there's a brilliant term sheet that's gone around the internet. Now, I'm just trying to remember, some of you might remember who it's from. Passion Capital.
Yes,
Passion Capital published an
Term
absolutely
sheet in
brilliant
plain
term
English.
sheet, which they've made available to anyone who wants it. And all it is a letter from the company to its investors saying, I'm going to write to you in normal English, and this is what you're actually getting involved in. Rather than, particularly the US suffers from this the most. I mean, US legal speak is probably the worst legal speak on earth. You know, it's very, very complex. The phraseology and the verbiage is very, very long.
It's not intuitive.
Yeah, it's not. You need to be a lawyer to read it. Whereas in the UK, it's slightly more sort of native English that's written in legal contracts.
Are you giving up half of your? Should you expect to give up half of your company if you're raising, I don't know, $100,000, $200,000 US?
What, sorry?
Third of the company. What should
in
you?
terms of valuation?
About.
Yeah, I think the seed money normally 25% is about.
Yeah, even 30.
Yeah, it's a lot. I mean, that's why if one
Yeah.
can get the money on Seeder's platform and give away 11 or 12%, you know, I'd do that. I mean, it takes a bit more effort, but 25% is not unusual for the early stage.
Right, Martin.
Yeah.
What do you think?
It depends a lot on the type of company. I mean, the further you can get down doing it yourself, self-funding, bootstrapping, crowdfunding, whatever, the better. Always.
Right.
Yeah.
Right.
And getting to the point that you can. I mean, if you're trying to sell something off a PowerPoint deck versus
Those days are gone. I
okay,
think.
keynote, but you know, you need to have something that people can look at and see.
Yeah, there's no
see,
question.
feel, and touch.
I mean, we have a lot, particularly in the gambling space. I think in this sort of audience like here today and in the game development community, typically people are developers. They can, at night and on weekends, they can build something. They can show you something, at least it feels like a prototype. What we find sometimes in the e-commerce space and sometimes in the gambling space is a business guy or a commercial guy or girl, but speaking generically, arrives and says, look, I'm now going to go hire 2 developers, and it's going to cost me $150,000 just to build a prototype. And it's like, oh, it's dead in the water already. And the US style of startup is usually there's a dev guy involved in the startup team, and they can build something, and it costs them nothing. And it's a massive advantage. I mean, the difference between having to go find 2 developers at some meetup and then get to know them and then spend...
Manage them, and
Yeah.
they're generally offshore, and you might be based
So
somewhere on...
we
you know,
would
like-
always favor a team in the early stages that has a developer on the team, in the founding team.
So if you can get there, and if you're super successful, you're going to have an amazing ride. So we've seen some incredible M&A activity in the space over the last 3 years, like explosive. People getting huge payouts, the Playtikas of the world, the Buffalo Studios. Do you want to talk? I can flip through the slides.
I'm a bit more bearish. I take a slightly more bearish view than that. I think in the tech sector, now there's much more competition probably, and there's a lot more smarter people chasing exits and that, but you can get 10 times revenue. You get 10 times revenue on an early stage business and you've got money for generations. In the gambling space and the social gambling space, exactly the same, and that's why Andrew put together that blue block at the bottom there. The majority of exits in the gambling space, whether it's social or real money or it's a game or whether it's a platform, it doesn't really matter what it is EBITDA based, which means you need to have profits. And so some of these explosive exits, like the famous one was, we were involved in Dragonplay, that was, we were a vendor there, but Bash Gaming, the big one was IGT on the far side there, Caesars buying Playtika. Those were 6 to 8 to 9 times EBITDA. Those fortunately were profitable businesses, and it's even Churchill Downs having just bought Big Fish. I'm sure there's people around this.
Big Fish was at a slightly bigger multiple. It went for 8.5.
Exactly. But even that,
it's not double-digit
multiples. And
so is it a mature market now?
It's a very efficient.
After 3 years or whatever.
Yeah, I think it's quite an efficient market. I think if someone's starting a social casino business now, there are still a number that have got reasonable scale and reasonably profitable, but they can't expect.
They're going to be exiting to one of the large consolidators. I mean, if you're starting
in that price range,
yeah,
like there's not going to be. I would be very surprised if we see a 20 times EBITDA exit for anyone in this sector. I just don't think. I think it's just highly, highly unlikely. Same true for a games developer.
Who hasn't bought a company that you think is ripe to buy a company?
I'm less bullish on the real money with the 888s and that buying anything in the sector. I think that they've, like that particular example, they tried Mytopia, very difficult to do. Bwin tried to incubate something internally with Winner.com. None of it works. We're not seeing much in the way of convergence between these two sectors. In fact, we're seeing none.
That's what they were saying in the panel previously. I mean, they're just different.
They're just different
audiences.
people, different triggers, different people playing.
But we have seen, and I know this from the guys at Foxwoods, who are running their social casino operation where they're pushing their real money players into their social product. They're seeing huge returns. So the real money players are willing to play social when they go home.
So they're real money
dropping.
Real money land-based is different, I think.
Real money land-based into social. One of their players, I guess Frank's not here, so I could say. So I think that they had one whale within the last couple of months that spent $100,000 through their.
I can believe those numbers.
Social.
I think the interesting thing about the US, in contradistinction, for example, to some of the other big social casino markets like the UK and Australia and Canada,
the online.
There's no legal, as you know, real money wagering. There's very little illegal real money casino wagering in the US. So a guy leaves Foxwoods and he wants to have that little, have a flutter on, that's the only outlet he can express that is through a social casino. In the UK, he can just open up a real money wagering account. So I think in the US they have that particular opportunity, and I think that opportunity is going to be there for the next 10 years.
30 to 40 to 50% of their player base that they pushed it to are adopting it. So it's an amazing adoption by their customer base, and I think we're going to start to see other casinos start to.
No, so that is true. If the adoption rates are quite as high as that, you might find some US land-based guys maybe wanting to take but then they would have to buy a business of some scale. Churchill Downs is a good example. That's presumably what they were thinking. It's hard to know what they were thinking really, but the market hasn't really responded to that deal. But it was
have to do something. Horse racing is dying in the U.S. and it's like a cigarette company buying other products to try to make up for an industry that's no longer going to exist.
But I mean, to Andrew's point, I think if there are going to be exits, it's more likely that a double down, for example, says, okay, we need to grow our business in Indonesia. Let's find a social casino that's got a decent Indonesian base and buy that. Or
Latin America is looking incredible, and we're struggling with product down there, so let's go and buy a Latin America.
So that's the opportunity. So
I think it's
create
geographic
a localized casino product that one of these guys is going to come in and buy.
And hopefully with localized content. I mean, we've seen that with Peak Games, and it's been a very successful model. Localized content, I think, if you're sitting in Seattle or you're sitting in Tel Aviv and you're really not sure what kind of games people are playing in Mexico, the chance are you might be inclined to buy a Mexican-facing and Mexican-originated business. I think so. Those exits, I think, are still to come.
I think that's
and
really
they can be much smaller. There can be 2 developers with 3 or 4 other marketing guys maybe in a room, and they can maybe be making $1 million of EBITDA, and they can get maybe 10 million for that business. I think that's a possibility.
It was really, so we all did come from the ICE show, which is, if you guys haven't been, it's the International Casino Expo. And I think 25,000 people there maybe. Yeah, it was, I mean, it was at the huge, the world's largest expo that they have in London, but amazing to walk around the floor and to see all the different kinds of gaming and the different kinds of markets and different kinds of genre games. Like slots games that appeal to a German market are totally different than games that appeal to the English-speaking market, or games that appeal to the Asian markets. So there is a huge opportunity. I think you're right in very, very kind of like niche market deployments.
If I was looking to start a more mass market business, and one of the panels yesterday spoke about this, and I think he spoke about it very competently in terms of the use of brands. If you walked around the ICE show, every major stand, all the major manufacturers, WMS, IGT,
Branded.
Aristocrat, have got masses of branded content. And that content, they charge a huge premium for it, and I'm thinking things like, what's the big game that
Price is
Alan?
Right,
Price
Deal or
is
No
Right.
Deal.
Well, that's kind of
Deal or
old
No
already.
Deal.
Deal or No Deal has been around for 10 years, so I'm thinking of the newest.
IGT has Alan's game, the talk show, which is
Yes,
huge in the U.S.
So what's the big?
Michael Jackson is the biggest.
No, the Sex and the City was kind
Million
of quite
Pound
Wonder
big.
Woman from Bally.
There's Austin Powers is now a big game. They've used Friends. So if I was looking for a more mass market proposition and I was a media guy, particularly maybe from somewhere like LA, I'd probably looking to see if I can do a deal with maybe 4 or 5 brands.
Yeah, but you got to have a lot of
Hard
venture
to do,
capital to do
hard
that
to do,
because these
yeah.
guys want huge
Guaranteed.
MGs. I mean, really hard.
So the guy from WMS and IGT, he done their brand deals for them as for the real money. And when he did the real money deals, he
big
kind of took off the social rights for himself. And before he even developed the game, sold it to Zang for 30 million.
Nice work if you can get it. The other one I was thinking is Big Bang Theory. So
Big Bang Theory, yeah.
who would have thought, I wouldn't have thought that Big Bang Theory could translate into a slot machine. I mean, it is absolutely their #1 machine at the moment. Everyone wants it for certain markets. And so, these brands have got much more pulling power than I would have thought, actually. And then what the casinos do, they put it in a very prominent position, obviously, makes a lot of noise. There's this huge audio associated with it. And then they stick their quieter machines around them, and that's obviously where they make all the money. But these branded machines are a huge draw card, and I think the same is probably going to happen in online. Like for example, we did that at Dragonplay. So we had Popeye. So it's kind of a bit of a tired brand, but it's very, very well known amongst a certain age group. And again, use it as an acquisition tool.
I think that's a key thing. So Popeye is a nostalgia brand, and nostalgia brands do incredibly well in the gaming
That's what they were saying
space
yesterday
because
with
you've
like
got
Garfield, for example. It's another nostalgia.
Yeah. Well, you've got the 35-year-old plus demo that remembers watching those shows on TV or the movies, and that's who's playing. At least in the States, you've got, if you go to those casinos there, it's 40 to 50-year-old women who are playing the slots. 90% of the revenues that are coming to a casino are coming from the slot machines, and only 10% are coming from the table games. So that's why we were seeing a lot of like slot products, especially online slot products. And it's interesting. We're making games for my mother-in-law. I mean, that's basically who we're building our games for, and that's what they want to see. So sometimes those licenses are surprisingly much more easier to acquire than a normal license. It might permit somebody to say, it's like, hey, it's like, well, Top Cat, we haven't seen that, that's been a cartoon that hasn't been on the market in years. We won't charge you minimum guarantee. We'll give it to you. And that's where a new startup can hopefully have an advantage.
I've spent a bit of time in Los Angeles recently, and I think since the whole Kim Kardashian phenomenon in the last, 12 months or so, that the whole MG thing is changing over time. I think so when people are seeing real profits, the same happen in music. it was very, very hard to get hold of any kind of content up front. But then once people are seeing sensible numbers, if the minimum guarantee is the blocker, they're starting to be a little bit more entrepreneurial about it. It's just the personal experience we've seen over the last 6-9 months.
I mean, that's the trick, is sort of finding, like, you know, if you don't have the money, you got to be smart and you got to find other ways.
I'll give you one example which we saw. It was phenomenally successful. It was a business we were involved in some years ago, and very clever. There was the Alice in Wonderland movie coming out. When was that? Maybe 4 years ago. It was a massive. Was it Johnny Depp? I think it was a massive success, a very surprising success for a lot of people. So he identified, there are websites, as you probably know, that you can look at with that give you advance notice of movies that are in production. So he looked at the Alice in Wonderland. He realized that the actual intellectual property behind it was well out of copyright. You know, some of the Alice, goes back to, when did Lewis Carroll write that book? Probably like 100 years ago. He took some aspects of it which were not copyrighted. He made himself a slot machine, and he absolutely built a business which he then sold to Playtech for 28 or 30 million pounds for. And that wasn't only a one slot game, he had lots of slots. He was a great developer. But he launched Alice's, it was called Alice's Wonderland instead of Alice in Wonderland. I don't know how he managed to get away with it, but he did. And it was massively successful. And then what he did, he then went and mined the fairy tales from the Grimm fairy tales, the Brothers Grimm, which are also, like 400 years old.
Mirrorball.
No, not Mirrorball. No, this is Ash Gaming.
Okay.
And this is in real money wagering.
Okay.
They didn't take them successfully into social. He went to the Grimm fairy tales, which a bit like Shakespeare. You can take, or Shakespeare's well out of copyright, obviously. And he went and mined the Grimm fairy tales and built a few extra games there. And I think that there's still ways of finding smart games that belong in those sort of genres, particularly that are going to be linked to a movie somehow.
It's a really interesting idea of like where can you leverage a brand that is a known brand but is an available brand.
I'll give another example just in case anyone wants to build a game. And we saw guys who own, like Elvis is a great example. So Elvis and Marilyn Monroe, Rat Pack, all of that, very, very successful in the games business. There's lots of intellectual property. For example, a black and white photo of Elvis getting off a train or something. That photo belongs to someone, and that guy is allowed to use that photo as much as he likes. Now, the Elvis estate might not like it, but we've seen examples in that specific example where he was able to use his photo, build an Elvis slot machine, and he couldn't do it in the States. It was too difficult in the States, but in Europe he was able to launch an Elvis slot machine without any royalties to the Elvis estate.
Wow.
Now, it's
they would
it's
probably
quite
come after you in the States.
but he is using intellectual property that is lawfully owned and licensed. So Elvis is probably aggressive because that estate is quite, but he used some Maryland stuff. There was a few, he went and bought photos from some of these photo archives. It was a very clever way of looking at intellectual property. Yeah.
So we've also seen another opportunity in this space to kind of get started faster is to get content from existing companies. So there are a lot of slot companies out there and suppliers. There must have been 200 or 300 at the show that all have real money product that they would make available, and a lot of them's like, well, we've never licensed our games, we'll give them to you to use on a revenue share. So all of a sudden you've got real money, high quality product that someone's put a lot of money into that you potentially could get and use for a startup opportunity to launch a new casino product. So it's a great way to get started. We know somebody that just did this, a company called Bagel Code, which is out of Korea, a really tiny, that's K, a tiny little startup out of nowhere.
Publishing through Big Fish,
yeah. It's just a really amazing story.
It speaks a little bit to what's on the slide in the background, which is talking about just the fact that what really does count and what we've noticed following this sector for 3, 4, 5 years now is the quality of the content is important. It's very important. I think some of the early guys who were able to get big on iffy content, they've fallen away now. And the guys, and I've shown 2 different examples there. One is just obviously one of the market leaders, Double Down, but also Product Madness. They're seeing phenomenal growth, and they're seeing phenomenal growth driven by very high quality content, and they're achieving up, down.
And high quality content in that example is it's Aristocrat. They're a 35-year-old Australian slot manufacturer. They really genuinely know how to make slots. They know how to make slots that engage people and take people through the journey and all of that. And that absolutely we see it. They are getting opt hours of like 40, 42, 43 cents.
So if you don't have access
That's the thing. So, I mean, one can walk around the ice show and there are a lot of developers, but if I was, I mean, you want to get proven stuff. So there's High Five and there's IGT and there's WMS. Those guys will never give you their content. I mean, the IGT content is locked down exclusively to their own in-house. Konami might, yeah. So, but what I mean is that you have to get a content, in my opinion, from
the smaller ones. It's the independent.
Tier 2.
But you don't know. I mean, I know that's the Bagel Code deal, and we know the developer, and I actually quite like the games he's built there. But you have no idea whether they're going to be successful yet, because there's no brand recognition amongst your player base, and there's no experience yet to show that those games are winners. So at the very least, I mean, I used to be involved with a business called Nix, which owns a studio called Next Gen. We licensed a lot of content into the social gaming sector, and at least there was some chance of success because I could prove when we were doing those deals that those games are top 5 games on a Bet365, for example. So at least you know that players actually genuinely like to play them.
But so with Product Madness, though, that you were referencing, Product Madness got their games from Betsoft, and these were already...
That's exactly right. So the initial guise of Product Madness
back
was
in the
Betsoft.
early days.
Yep, Betsoft. There was Icon. They had content from Icon. They had content from Rabcat. They had content from lots of different providers. They'd pay 8, 9, 10, 11% away, and just published the games. They created a fantastic metagame around it, made it an engaging experience, and were able to get themselves away to Aristocrat. And then this whole strategic rationale behind that deal was obviously to then, as Melissa said, get access to their library. And then they came out afterwards with the app called Heart of Vegas, and Heart of Vegas was their big Aristocrat library play. And I happen to know the CEO very well in that business, and he was blown away by how that content performed.
How do you know when to turn yourself from a game developer to a publisher, like Product Madness? But with a lot of these guys, I've seen so many...
So Product Madness were never really a game developer. They were always, I mean, they never made their, I mean, they started to dabble in it latterly, and I think some of their first forays into mobile were games that they incubated in-house, but the traditional canvas business of Product Madness, they were not developers, they were just pure publishers. And I'm trying to think of an example.
I hear like saying sometimes, well, we'll take your card, we'll take your content, and just, we'll distribute it through our people. So at what point in the future from a game developer to a developer and a publisher?
When you've
It's
got
different business
millions of
models.
users. Yeah, I mean, we tried it actually. I've got some direct experience of that at Dragonplay. I mean, Dragonplay didn't have that many installs, but it had several million. And we did try take some strategy games, which we thought would work for a segment of our market. It just didn't work. So they did try the publishing model on the basis that it's kind of hard to have dev teams building everything. So we tried this sort of Korean style game. It didn't work, but
You still sold it for $100 million to Bally.
Yeah.
That's a pretty good deal.
Bally really wanted to be in that sector,
Yeah.
We weren't going to stop him.
What about, so one of the things I also saw at ICE was the GAM Crowd. And GAM Crowd is a new platform that's...
Crowdfunding platform.
Yeah.
Absolutely.
Do you know about this? Do you want to
No.
talk about it a little? Those guys I was trying to get them to come. They couldn't make it because there were so many people wanted to meet with them, but I feel obligated to talk about them anyway.
Look, I mean, we know GAM Crowd relatively well. I mean, I think they are trying to do something that's quite tough because it's a niche sector. I mean, it's as big. We think of it is the hugest sector because that's the sector we follow, but it's not broadly focused. But yeah, I mean, I think they are effectively a crowdfunding platform. You can submit your business plan there. They have a good amount of audience. I'm not so sure how many deals they've managed to get funded away so far. I know that their specific only one was
the number of investors, and that's unfortunately what you've experienced this, and the number of investors who will look at gambling content, whether it's social or real money, is very limited. And firstly, huge numbers of pension funds and that who invest in venture capital businesses, particularly in the US, have as part of their mandate that they won't look at anything to do with gambling. So even if it's social, it's just, they won't even have the first meeting with you. Yeah. Most of the VCs in the US and probably half of the VCs in Europe. So the problem with the Game Crowd concept, we felt, is that the investor universe is so small already that does it need a crowdfunding platform?
Isn't that more high net worth?
Well, no, it's more high net worth.
From their personal networks, kind of.
Correct.
So it is more like an incubator fund than anything. Oh, okay. I think it's a good idea. So
one of the challenges that they have is that crowdfunding is a country-by-country thing, right? So you don't necessarily have to be a high net worth individual in the UK. They can only invest in companies in the UK, but because they're not VCs by trade. You guys, especially Evan, has been looking at deals since I've known you from Fairground, so 2004, 5. And so they're new to this, so I think they're going to have to feel their oats a little bit and get to see a lot of the deals that run through the network before that they have a better filter about what will work and what won't. So it's early days.
But at least they're doing
available,
it, and,
yeah.
and I
What they're doing is great, and then they're coupling it with crowdsourcing.
Yeah.
I like the crowdsourcing aspect of it.
yeah, and hopefully that the network will increase, which I think is important. I mean, you've got these startups in the U.S. like Y Combinator, and why can't we have more venture backed startups in the U.S.? I mean, I think for this area, we've seen it's been so wildly profitable. I mean, they're the most profitable games on the internet. I mean, pretty much, right? I mean, can you speak to that? Like, are you going to invest in put some of your monies into casino gaming?
We're working with a few casino gaming companies, but it's much more around a kind of cash flow and optimizing the use of funds for marketing and
Right.
more user acquisition.
All right, so we've been chatting with these guys over here for let's talk a little bit about what you guys are doing. So I've raised money. I've gone through all the money that Andrew and Evan have given me, and I'm getting down. Which always happens. It's like we work on the product, and by the time we're ready for marketing, it's like, oh my God, this is now the biggest expense, and I need money to do it right. Or I'm a startup, and I don't have the money to cash flow myself. So let's talk about what do you do in that situation.
So that's where the whole kind of that's exactly where we fit in, if you like. So first of all, it's all about kind of metrics. You need to show that if you're going to put money and pump a lot of money into user acquisition, that you can do it profitably. So the sort of the dirty kind of secret that no one wants to talk about is if you put $1 into user acquisition, you get $1.50 out in LTV. You should do as much as you can, as quickly as you can. If you put $1 in, you get 90 cents out. You shouldn't do it at all. And no amount of raising equity capital to just throw at user acquisition is ultimately going to solve that problem. So a lot of the companies we're working with have spent a lot of time figuring out a profitable user acquisition formula. And then once you've got that, and obviously in the social space, one of the issues is that a lifetime can be a year or more. So you're not talking about a lifetime hit up front as you might do in some other games. But once you've got that, essentially you get to the point that your game can fund its own user acquisition. So you want to keep your equity money in the bank, use that for building your next game, hiring a team, if you like, and have the sooner you get your game funding its own UA, then it's off to the races. And then it's just a case of how what the lifetime value is, how quickly you can double down on that, and obviously testing a bunch of different ad networks. And
How many games have you are providing financing for right now?
So we're working. We're not disclosing the
More than 10?
Currency, yeah, more than 10.
More than 50?
Somewhere between 10 and 50.
Okay, 25, 30. And what's the average amount that you're providing on a monthly basis in terms of financing?
So that's an interesting one. We were expecting, if you look at the shape of App Store receipts, it's a massive L-shaped curve. So you've got 20, 30 people who are making a lot of money, and then you've got 30,000 people that are making some money or decent money in the long tail. So the long tail is the interesting bit for us. That's where you can hopefully take people and help them sort of grow up the curve a bit. So we're expecting it to be right at the end of the long tail, the people who are doing maybe just a couple of thousand a month, but we've been really very pleasantly surprised over the last sort of 3 or 4 months. The level of inquiry is from companies who are doing quite a lot bigger sums, actually then just coming up against real kind of growth challenges. So the numbers have been taken up to the sort of 50, 100,000 average, something like that a month.
100,000 a month?
Yeah.
Wow.
What do you do? I'm interested. What's the kind of business model in terms of you lending that on a rate base? I mean,
so some people want to take it as cash, and that may be just a pure cash flow thing. In which case, we'll do a 95% advance every 7 days, so you're not having the 67-day cycle. Increasingly, though, what most are doing is taking that funding and rolling it directly back into UA on currently we're doing it 7 days. We're just about to flick the switch so it goes to a daily advance, and then not actually charging the developers at all. So if you did $20,000 on day one, we can put $20,000 in whichever ad network account.
If I do $20,000 on day one, I want to get $100,000. that's where I want to come to you because I want to supercharge my UA. That's the money I need. Can you help me out there?
Well, we can help you a bit, and it's a case of how quickly you're monetizing, right? If it were to be a paid app and all your lifetime hit is up front, then sure. If it's not, then
Are there still paid apps? I didn't know.
I think it's an interesting model. So would you consider, or can you see that, because I think it's a really interesting model. I mean, I think the PayPal, not the PayPal, the eBay merchants and the Amazon merchants now have access to a sort of factoring
Similar
facility,
service.
which has been very successful. Can you envisage a scenario where people will lend against lifetime value? So they can do you can do your analytics. You can say, I can see how you got 20,000 of daily. That's probably going to be 300. Would you lend? Can you see people lending the 300?
Yeah. But what you need is data and time series to do that. So currently we start off on what's bankable Apple receipts with more data and more kind of relationships, if you like. Then and actually a different risk profile as well. You've got one thing taking a data-driven bet on someone's ability to monetize, and you've got a lot of operational risk and other things in there versus taking effectively receivables risk on Apple. But actually, the whole kind of wider vision of what we're doing is we're seeing, once you've got these big data sets, you can price more interesting problems that traditional financial services providers can't because they don't understand the sector.
I think that's actually got me thinking. That's an interesting model, that one could do a forecast, because the forecasts are probably fairly bankable. I mean, I know the modeling we use in the social casino and the gambling sector, and you can pretty much take poison on them.
It's like futures, basically.
Yeah, like we know if a guy's in a certain market spending a certain amount of money, we've got a pretty good idea when we plug it into our models what that player is going to be worth. I mean, I would say we've got an 80% confidence. And you probably find the same is going to be an a massive multiplayer game or something. There's a really interesting model there, actually. Take a bit of capital, but what you'd be doing is investing in the early stage of developers, but with a real insight. It's an interesting idea.
It's got to make sure you have a good analytics platform
It's all about data.
Partner with an analytics platform,
Yeah.
Yeah, you need to have very good analytics in early, and you need to show that right from the start you are really thinking about how these levers get tweaked. If you're going to try and borrow money, because effectively we're talking about borrowing rather than raising equity capital to do it. Yeah, but that's where it goes.
I think we're probably going a little bit long, but do we have time? Anybody want to ask any questions? Okay, great. Anybody have any questions? Anybody want to pitch their concept for a business to these guys, or? Okay.
I have one question.
Yeah.
So, game development is a hits-based business, right? As opposed to a lot of other businesses, which is more steady. I mean, you're proving out through the factoring model that maybe it's not as hits-driven as you might think, but fundamentally, once you have good data analytics, but fundamentally it's a hit-based business. And at what point, I know you said that you're following these companies closely and you're trying to understand their KPIs. At what point do you have that, we're comfortable moment where you might have not have been so comfortable in the beginning?
I think there's two different parts to that. I think depending on the scale, if it's really big and successful, you can see one game. I mean, I'm thinking in particular now about a company that I was working with years ago, not in an investment capacity, but in an advisory one. It was Blue Shell Games. Blue Shell Games had one app, it was Lucky Slots. That app was so phenomenally successful that the cash flow coming through that, you could bank on enough that you would think, based on the intelligent team, that they, and looking at their process for the funnel of developing new content, you would be able to sort of effectively get involved with it. I mean, certainly that's what I was selling when I was trying to raise money for them. I mean, you would be able to sort of bank on the cash flows that one game was able to throw off. It's different where you haven't got that one title in your portfolio that's throwing off all that cash. And then you're really looking at the ability to take concepts, throw them up against a minimum viable concept, iterate, and then kill your losers quickly and follow your winners and take a portfolio approach. There's no specific science to it. There's no specific maths in terms of what you expect to see at the top of the drawing board versus what's competing down and getting through and being successful. But you just got to get a feel for people and whether they're able to find the magic. And that's typically just it's a gut thing.
Well, speaking of building on that or further your questions on the prior slide, most of those games were one-hit wonders. They were not portfolio approaches. So how do you make the portfolio? Has anyone made the portfolio approach work? I mean, I don't even think King has made the portfolio approach work.
Certainly. I mean, King, it's a good example.
But I would invest in we would invest in a game developer And if a game developer has one hit, so I'm talking specifically in the real money wagering environment. Let's take the Alice's Wonderland. He's got Alice's Wonderland. It's a hit for whatever reason. All the, we say like Kentucky Fried Chickens, the 11 herbs and spices. You're never sure what the 12th herb that makes it a success is, but he's got it. He's then in a very good position to go to his, because there is competitiveness amongst the real money wagering guys. Go to them and say, look, you've got my first game, it's a success. I will give you my second one, provided you put it above the fold. I mean, it's critical. Name it with something that's got an alphabetical in the A to E. Bizarrely enough, those games will be better than the ones with Zs because they don't appear. Most real money wagering clients, guys are getting better with analytics now, but most of them are still alphabetically determined. So you beat them hard to say, I'll give you my second game, but you better put it above the fold, you better promote it on a Friday afternoon for the first 3 months, whatever it is, and there's a pretty good chance that game will be a success. So success then begets success because of leverage.
How much does it cost to do that, to build that?
What does it cost to build a game? Well, I can answer it from the other side. If you were selling a game in the real money wagering environment and it's tested and all of this and maybe in multiple languages, you'd probably sell the game, I mean, it's quite hard to answer, but probably $150,000, 180,000 euros, those sort of numbers to sell a game. So hopefully it's costing quite a lot less,
But if you're smart, you can go in and get a math model from somebody, and
Yeah.
then you can go out and get the art separately, and then you can just create.
Yeah,
you know,
no, we've seen social gaming developers. In fact, they pitched to us at the last conference. We've known them for a long time. They are releasing a game a day at the moment. Now, it's kind of ridiculous, and how much QC and that can go into that, and what sort of quality can really go into a game a day. But there is the ways to
reskinning the
build
same math
efficiently. Yeah,
models, basically.
yeah.
What
I mean,
they're doing.
microgaming.
Who is
They
it?
say they're not. I mean,
Yeah.
that one is Gerald. Yeah.
Okay.
I don't know how they're doing it.
They built it so that they've got 9 different ways. So they're like, okay, here's how many reels. So it's between 3 and 5. Here's the one.
Yeah.
Ways you can do
They've built a platform for building games. I mean, I'm not sure.
That's
But
like
if
a
I look
variant.
at the real money wagering world, like microgaming is probably one of the top slots developers in the real money online world, and they release 1 slot a month. So 12 a year. It's not that many, and they've got hundreds and hundreds of developers churning out 1 slot a month. So really depends about the quality, and there's.
And by the way, Gerard's game, in terms of slot quality, a lot better than a lot of the others I've seen.
Really, we should have invested.
I remember why we didn't.
All right. Well, thank you guys. This has been very informative. I hope you guys have learned something. So thank you very much.
And we didn't have any stats. Thank you.
Thank you.